We're not going to get into the debate about whether we are essential or not. Today, we're going to try and keep that to a minimum. We're going to let some other people speak to that as they come. I've reached out to Tim Hudak and I've reached out to Matthew Thornton. So if they message us while we're on the call, maybe we can get them in here to chat about it, but that's their space. I think we're going to let them talk about that stuff a little bit. But on the other side of things, right next door in Quebec, they've taken drastic action to try and especially in our industry, slowing down and stopping the land registry system, and also telling realtors that they're not essential and to stay home and not do anything. So it's a real shift and a real difference from what we're doing here. More similar to the New York style of shelter in place, don't go anywhere, non-essential stuff, and a few other jurisdictions. So stay tuned for that kind of stuff. We'll see what the announcements look like later on today. As a quick update, I received an email from the Canadian CAPI, Canadian Association of Home Inspection Professional. Oh, I'm going to get it all wrong. Anyway, the CAPI, who is the regulatory or the association for all the home inspectors in Canada, and they have looked through the list of essential services, and they've focused on number 65, 67, and 70. 65 is professional services, including lawyers, paralegals, engineers, accountants, and translators. We're all familiar with 67, which makes us essential, and 70 businesses that support the safe operations of residences and essential businesses. Although they're not quoting from them, although home inspectors are not specifically offering real estate services, the inclusion of number 67 clearly indicates that businesses related to the sale and resale of homes is considered to be essential. Given this context, this reinforced the need for professional services such as home inspection to be included in number 65. Skipped a couple paragraphs. Unless we receive information to the contrary, it is the interpretation of the Canadian Association of Home and Property Inspectors, that's what it is, that home inspection businesses meet the requirements of an essential business in Ontario, and that home inspectors may continue to provide home inspection services. So that should pave the way for inspectors to be able to come in and out of property. So if we have inspectors that are on the list, appraisers should also find their way to be able to be on the list, and maybe we can keep a semblance of as smooth as possible of a real estate transaction going. So just wanted to give you guys that update, and I can share that with you if you want. You can send me an email, jody@greatagent.ca, and I'll send it to you. Matt, what's up next?
Okay. So obviously we all know that 24 hours ago, there was a chance that everything would stop like Quebec, but we're in a very different place right now. So we've actually come around and we've brought Mitch Korman from Korman and Co. onto the call. Mitch, you're here?
I'm here. Thanks, Matt.
Excellent. So I think there's a lot going on, and we're going to try and keep this call short. We're going to try and keep it maybe like 20, 30 minutes, depending on how much you'd like to talk. But let's chat about right now. So let's start with, for everyone who's got deals that they've already done before March 13th, what should we be doing? Any changes, any amendments before March 13th?
Anything that's been done before March 13th, my advice is to just leave it alone. There's no need to panic. There's no need to make amendments. There's case law on how deals will go when deals go off the rails. But by and large, those deals will continue to close. There's nothing other than the fact that nothing else has really changed in terms of the banks, the registry system, the lawyers. Everybody's working, and we're just working remotely. And there might be some lawyers or mortgage brokers that are having issues working remotely. They'll solve those problems themselves. People are going into the banks or working remotely within the banks, so mortgage transactions are happening. Every morning we're getting transferred money to deal that day. And at this point in time, we have not had a single deal not close because of the pandemic. So I am very optimistic about how things are going out there. There are challenges, but still things are closing, and that's great.
Oh, awesome. So, okay, so today, now things have changed. If we're doing a deal now, what clauses should we be including, or what kind of timelines, or how would you change a deal now moving forward the next little bit?
I presented a variety of different clauses that I think you've shared with your group. But the message I want people to understand is those clauses are there for when they need a clause. So if your clients are, what if this and what if that, and they say they don't want to sell their house unless they have, unless they know that if they get COVID-19 and they're in a quarantine, they don't want to be, stuck in a situation where they can't close and they lose everything. So the idea of the clauses is to try to create more calm in the marketplace. So they're not for every single deal you do. They're for the deals that you need a clause to get the deal done, and to try and create a framework where deals will still happen. And if, unfortunately, if some people are going to get COVID-19 and they're going to be quarantined, and they may not be in a position to, do their banking or whatever else to get their deal closed. People want to have reassurance in many instances, especially older people, that if that happens to them, they don't want to, lose their deposit, end up in litigation over their house, whatever the case may be. So that's why I created those clauses. And when I did it, it was specifically because there was another law firm, which is a very large law firm in the real estate closing space, that suggested that we use a clause that says you must close no matter what. And that only creates more fear in the marketplace. And that's why my clauses were designed to counterbalance the agents putting in, regardless of COVID-19, you have an obligation and you have to close. Even if you're on a ventilator, you must close. I don't want that in our marketplace. I want to protect our marketplace and be understanding and compassionate as much as we possibly can.
Of course. So I always forget that I know you, and I use you, but many on this call might not know you yet. Can you actually just give us a really quick synopsis of kind of who you are and where you guys operate, and maybe a little bit more on the knowledge side of where you're coming from?
Okay. Our firms basically consists of 10 lawyers. We're all real estate lawyers. I've been practicing real estate since how long now? 1987 was when I started my practice. And we're seasoned pros in real estate. We close about 4,000 deals a year. Most of them are in the city of Toronto, where we close a little over 3% of all the deals in the city of Toronto. In Ottawa, we have lawyers and clerks that we just started up. We've only been open in Ottawa in the last year, and it's been great. And our starting point was putting an office within the same building with Remax Hallmark on Bronson, and lawyers in Ottawa have been covering all the Remax offices, and we also we've been slowly working with some of the Royal LePage offices and Keller Williams and a variety of other players in the Ottawa market. We also have offices throughout Durham, and so I've got 10 lawyers and 30 support people on my team, and this is what we do day in and day out. And our objective is everybody that I hire at the office, every lawyer, every clerk, our objective is to make deals close and figure out creative solutions, just get every single deal closed. And we've been through this before. We've been through, good times and bad times. We've been through 2008. We've been through even 2 years ago with the stress tests. Our deal still closed because we came up with creative solutions and didn't put panic in the marketplace.
Yeah, and so just really quickly, you guys are basically, a lot of your knowledge base is coming from Toronto, especially. So I like to look at it as like you guys have a couple years, in advance of what I've seen some of our lawyers, even just with the condo status certificate, we basically are getting same day turnarounds or even a couple hour turnarounds on reviews and stuff. So, we've been really blown away, and I'm really impressed. So it's, without a question, I think everyone should kind of take a look there. But so I've heard you talk a few different places about insurance. And can you just kind of touch on some of the worries right now that we're seeing?
Sorry, insurance, did you say?
Yeah, insurance. I've heard you talk about it this morning. I heard you talk about it yesterday.
So the problem is, how do what do you do if your home inspector doesn't want to go into a house, or you can't do a proper home inspection, or your clients are buying off of virtual tours? So one of the the title insurance companies that we deal with, Chicago Title, came up with a program less than a year ago, and it includes home insurance on things like heating and air, electrical systems, hot water tank. So it's insurance that they provide along with the title insurance. So we're encouraging our clients to sign up for it because it's free for the first 6 months. It covers purchasers for up to $10,000 in repair, and it has a $50 deductible. So let's say your buyers go into the house and they plug in all, their computers, and they trip all the circuit breakers. For $50, you call the insurance company, they send out a licensed electrician with a $50 deductible, and they will evaluate the problems and fix it, and they will fix up to $10,000. And so that's a great program to have, and it's free. So we're using it basically on every house purchase that we're dealing. It's free for 6 months. After the 6 months, you pay $17.50 a month. But you can, I sound like an infomercial, you can cancel at any time. So essentially, we're telling clients, you'll know if there's a problem with the house within the first 6 months. So take it and just diarize that to cancel it after 6 months, and then not pay the $17.50 beyond. I think it's a great product and gives great peace of mind to buyers who, I thought, I used it personally for a house I bought, I guess about 8-9 months ago, because I really believe in the product. I think it's great and it's free. Now even more so, because now you don't have the opportunity to do the inspection that you otherwise would have done.
Yeah, no, that's a great product. So we'll get more information. So we haven't shared any of the clauses that Mark that Mitch is talking about, but we will share them shortly in the group after this call is done, and then we'll also share the information for the insurance and for you as well. So
Matt,
you guys,
can we just jump in real quick? Mitch, what was the name of the title insurance company you used for that warranty clause?
Chicago Title.
Okay, and we'll circle back with that after as well.
Yeah, most of my deals are with Stewart Title. Stewart Title and Chicago Title Stewart's my #1 title insurer. Chicago's my #2 title insurer. Stewart Title is the #1 title insurer in the Ottawa marketplace. I don't use FCT. I've never been a fan of FCT. So most lawyers in Ottawa are set up with Stewart, and unfortunately, I love Stewart Title. I've been with them from day one. They're wonderful people, but Chicago in this instance offered a different product than they had, and that's why I'm recommending it to my home purchasers. I'm still doing all my condos with Stewart, but in this moment in time, I think that's a valuable asset. If people don't want to opt into that insurance provision, I can still title insure them with Stewart Title, and I will, because I always want to keep 2 title insurers very strong in our marketplace.
FCT, obviously, First Canadian Title, right?
Yes.
Yeah.
Not a fan.
so I've heard you use the expression "loose lips sink ships" recently. Can you explain that and what you're seeing right now?
Yes. Because of COVID-19, there will be a lot of people that are going to get laid off of work. And I use the word laid off, not fired. So if a client were to come into a lawyer's office or come into a mortgage broker's office and, let's say they're doing it virtually, they're not coming to the office, but it's time to sign. And the client says to the lawyer or the mortgage broker, I can't believe I'm signing this stuff now because I just lost my job. We as lawyers and mortgage brokers act for the clients, and we also act for the bank at the same time, where we have full responsibility. So if a client tells me that they lost their job, I have an obligation to that this client just told me they lost a job, and the bank is likely going to pull their mortgage from them. Was I just muted? You're unmuted. Oh, there, perfect. So that's the problem that we have. So my suggestion is, if you're talking to your clients, make sure that they don't say anything to me or to their mortgage broker. I mean, we're not obligated to ask questions of our client. The banks haven't said, we want you to ask all these questions of the client. We don't ask what their situation is with their job, and they shouldn't tell us, is essentially it. Otherwise, they run the risk of having their funding pulled.
Awesome. And so how are you guys handling the signing of documents? Can you walk us through this? Like, I know you're supposed to be signing everything in person. So what's going on right now for you guys?
We are signing everything remotely. We're doing it with Skype and with WhatsApp and all the other tools that we have available to us. There are many of the banks are on board, but there are a few of the banks that are not. And for the banks that are not, we are figuring out ways to meet with our clients, which is ridiculous in this day and age, particularly because when we get title insurance on 100% of the deals that we do, and title insurance not only insures the buyers, but it also insures the bank, and it insures the bank against fraud up to the value of the mortgage. So why there are still some banks insisting upon us to meet with our clients and get wet signatures as opposed to DocuSign is mind-boggling, but it is the reality that we're in, and unfortunately, it puts some of my staff at risk, and we're dealing with that. And
Mitch, do you have a list of the lenders? Mitch, who are the lenders that will accept digital signature?
I don't have a list of which ones will and which ones won't, and right. There's a difference between, by and large, none of them want DocuSign. The question is, will they accept a signature that was really signed and then just scanned to us? So an electronic version of a real signature.
Yeah.
Some of them won't even allow that. So I will post a list at some point because I've got to compile the list from my clerks of which ones will and which ones won't. There have also been some challenges for us with paying out mortgages. Like, this is not a client challenge or your challenge, but it really slows down and makes our job so much tougher. So you may not believe this, but the banks will not allow us to pay out. Up until a week ago, we had to deliver certified checks to the banks to pay out a mortgage. So we'd have to physically take them into every bank. So as of yesterday, TD Bank and Bank of Nova Scotia will allow us to do a thing where they deduct the money right out of our trust account, which is great. I'm not sure if the Law Society will like this. They probably won't, but it is one way around it. CIBC wants physical checks mailed to them. RBC and BMO still want certified checks. They want us to go to a bank, certify a check, and then deliver it to one of their branches. How absurd is that? And wow. This is as of yesterday. So we'll see if that changes, but it's ridiculous. It's not, and it's not I just want the agents to know that crazy things like this are going on. And at the same time, I got an email from every single one of the banks that I do business with, because I have an account at every bank, saying that we're here to work with you, and we're going to make this easier for you and everything else. It's all.
And just to be clear, when you're talking about signatures, so there's no confusion, the signatures that you're dealing with the client, not the APS paperwork that we're dealing with. You're specifically just dealing about your client.
Just our stuff. So this is the signing the mortgage documents, signing the commitment, signing everything else that goes with the mortgage. We're doing it with a real signature, and then that we're having clients scan it and send it to us. And we're on Skype, so we're actually watching them sign it. So we can say that we saw the client sign it, but we're not doing DocuSign or mortgage documents.
Okay, awesome. So let's shift into listing agent gear right now. So I love that you're coming from Toronto. There's a lot of differences here. What should we be asking for on the listing side right now if we're entering into a deal? So for example, bigger deposits, I think is going to be your starting point. But what else? And yeah,
bigger deposits is a good starting point. I'm thinking about this. I posted on one of these websites something. I asked for proof of funds for my client, and they sent me a skid of toilet paper.
Yeah.
That was, it's a joke, but proof of funds is really where it's at. So you want to, whatever you can do to find out information about who's buying that property and their ability to close the transaction, look at it from the perspective of what happens when you go and you buy new construction. What are those builders asking your clients? They're asking you to show proof of funds. They're asking you to show a mortgage commitment. They're asking you for a lot of things that you don't see on the regular day-to-day transaction when it's a resale. So take your cues from the seasoned pros who are the developers that are selling properties. Look at what they're asking for and then copy it. Now, you know, you may think that it's going to upset a little bit of your marketplace, but certainly if you're still in a very hot market, so you want to know that the people that are bid the most amount of money for that house actually can close the deal. You don't want to have problems later on, and you don't want to discover that they're really speculators and they don't have the money that they say they had. We went through the situation in Toronto, I guess a year, 2 years ago, where there were people that the market was so hot that people were buying really expensive homes and just negotiating long closing dates so that they could try to flip them in the interim. And the reality was they never had the money to close on it. They were strictly trying to assign it in the interim. And the dollar values were high enough that, you know, if you buy a $5 million house and it goes up by 5%, that's $250,000, and they put down a $100,000 deposit. You don't want to be in that situation. So do your homework and ask the right questions of the agent. And as the agent buying, have your clients prepared with those answers.
Perfect. And so what about, we're starting to see these pre-showing screening letters kind of floating around. You know, I'm also hearing that they won't really hold up after the fact, or they might cause more issues. What is your take on those?
I'm not sure what you're referring to, pre-showing.
Okay. So we're basically just seeing letters where people are declaring that they don't have it and they have to sign in advance of a showing, or you know, things along these types of lines. Any insight to that, or
Matt,
any thoughts?
The Rideau St. Lawrence Real Estate Board just came out with guidance from their executive officer, and they attached a form, one for the buyers and one for the sellers, basically saying, I haven't traveled, I haven't done anything. I acknowledge on the seller side, I acknowledge that I'm going to let people in, stuff like that. Both are one-pagers. I think theirs are a bit weak, and they're also actually just branded from one of the franchises, and they just took it and said everyone in the board must use this. So they're trying to make it a board rule on top of that. So I'm just curious what your thoughts are on how it's going to be used and if it's the right tool at the right time.
Question to me or to Matt?
To you.
Okay. This is a health issue, so it's not really a legal issue. I mean, what's the worst thing that's going to happen is somebody's going to say, yes, I haven't been to China, and in fact they were in China, and then somebody gets sick, and then they sue that person for lying on the form. I mean, that can happen, but I think anything that you do to pre-screen in such a sense with the form is beneficial from the perspective of it jogs people's mind to the question. So, for example, I just drove back from the U.S. and when I got to the border, the guy at the border, you know, it was late at night, and we were the only people at the Peace Bridge coming back into Canada. And the border guy handed me a piece of paper, which was a pre-screening questionnaire. And he's a guy who's supposed to be asking me, do I have anything to declare? What's your citizenship? But here's a guy who is a customs guy who's handing me a pre-screening questionnaire. And he's just saying, like, I'm just handing you this. You should read it, and you should be aware that you have to self-quarantine for 14 days. And if you feel sick, go to seek medical attention right away. And that's his job. He's not a medical professional, but he's just passing on information. And as agents, I think that's the same thing. We want to jog people's minds to the situation that we're in, and that's the best we can do.
Perfect. So we're at 30 minutes. We want to try and keep this quick, but I know we've got a lot to talk about still. So if we're looking forward, do we plan for further lockdown or quarantine at this time? If I'm doing a deal right now, are we going to start throwing a clause in to protect us for a possible shutdown? And then also, what else should we be planning for in a worst case scenario?
Okay. In your current forms that you use, there is no force majeure clause. And a force majeure clause is basically, it's a contractual provision that is put into lots of contracts that say, if there's an earthquake or a flood or whatever, this contract can be frustrated. So because those clauses don't exist in your agreement, if something happens, you're forced to try and work it out. And that means that if the land registry system gets shut down, when the land registry system reopens, that's when the deals get closed. So it's not that, it was purposely not put in there so that everything would just be canceled.
Right.
So what would happen in a bad scenario is that people would be forced to work out the problems, and they would close a little bit later, and things would happen reasonably. It wouldn't be a panic. So moving forward, I'm confident that the market will survive and that our jobs will survive and will be more relevant now than ever with our clients. But you also have to be armed with the right answers for the clients. Like, I wouldn't be recommending people to be buying and selling right now unless they have to, because there are a lot of challenges with the marketplace, and most of those challenges, I think, will come from offshoots of the real problem. I don't think that everybody's going to get sick, but I do think that people are working less staff, especially the banks. It's hard to work remotely, and you can't process as many deals remotely. I'm seeing that with my own staff. So if it's business as usual, and you're expecting to get a mortgage commitment, in a day or 2 days from your bank, it might take a week. So timelines need to be longer, and people need to be more understanding in the current marketplace that we're in.
So can I don't want to make this any longer than it needs to be, but because there's no force majeure clause in the agreement, and you believe it was deliberate, it forces everyone to kind of, if there's a global issue like we're having now, everyone moves along as opposed to having escape routes, and you believe that that's better for everyone involved. Is that what we're taking from that?
Yes. Yeah, that's exactly right.
Yeah. Okay. Thanks.
Awesome. So we're going to switch tone now to tenants. Oh, am I muted? No. Okay. Tenants. So there's a growing movement right now not to pay rent for April 1st. What are you suggesting? So if we do have a signed agreement to terminate the tenancy, let's start there.
Okay, let's start with people who just don't want to pay rent, because there's lots of groups in Toronto, and my suggestion to landlords is you should be talking to your tenants and finding out what their situation is. Be empathetic to people's situations, and some people will just not pay rent because they think that they can have a rent holiday, and those people, unless they have a real good reason for it, those people are going to get a notice to terminate. There's no reason why you can't give them a notice, and eventually when the landlord and tenant tribunal reopens, the chances are the landlords will get paid back. The trickier part is the people that you're expecting to leave and aren't leaving, because you can't get an order to evict a tenant at the moment. The courts just aren't processing them. So in that situation, and if you have a deal closing and it's basically supposed to be vacant possession, unfortunately you may have to offer the tenant a financial incentive, as in cash, to get them to move, because you don't have any other tools in your toolbox other than cash to encourage them to move. But again, communication with the tenants is really, really important, because I think if you reach out to them and you speak to them, chances are, of the 25% of the tenants that were intending to not pay the rent, you'll probably cut out half of them just by talking to them and telling them that their obligation is still to pay the rent. And for the people that are not moving just because they know that they can't get an eviction order and they've already signed an agreement to terminate, let them know that if they refuse to move, if they've agreed to move and they're just doing this because they think they can, let them know that the damages from them not moving might be hundreds of thousands of dollars, and the landlord will come after them for those damages.
Awesome. So we've got a few questions.
Yeah, I was just going to say, there's one here from Patrice, and she's asking, we don't hear these words a lot in Ontario, but is there a possibility of closing an escrow or using other tools, legal tools, to get this done?
There is a possibility of closing an escrow, and it's typically done when the land registry, like if there was a deal that was supposed to close and the land registry office, for whatever reason, closes for some, the government just comes out and says, we're closing land registry. So then there can be a transfer of money to a lawyer's office, and title insurance, all the title insurers do actually provide coverage in that circumstance. So what would happen is, assuming the bank is funding the mortgage, so the money has to go to the lawyer, and if the money is in a lawyer's trust, the keys can be handed over and the deal can be closed in escrow, which basically means that both sides agree that they will register title when the land registry office reopens. Now, that's for a very specific situation. It's very challenging. It's unlikely that that will actually happen in our marketplace right now, because I think that land registry office has been determined as essential service. I just don't think they're going to close it down so easily, especially since it runs virtually and is not dependent on people at desks and counters. So what I don't see the situation coming where people are closing in escrow, but it does have the potential. And
would we have had to include a clause?
No.
Okay.
They just have to have title insurance, and I would say 99% of the deals out there have title insurance.
Yeah. Okay.
There's no clause, or there's nothing that needs to get done.
Good.
The reason why it's not going to happen a lot is because if the land registry office does shut down, the banks will stop funding mortgages. Right. If the banks stop funding mortgages, you're not going to be able to have an escrow closing unless you're paying all in cash. So,
awesome.
One of the things that we have seen in the past, when things can't close, that's one of my pet peeves with Ottawa. No offense, guys, but the lawyers in Ottawa on a Friday afternoon in the summertime, they seem to want to leave the office at 4 o'clock or 3 o'clock. My lawyers stay till like 8, 9 o'clock at night in the summertime because we're so busy. And there's no such thing as going to the cottage in the summer. We can't do that. It's too busy. So what happens is we have a deal in the summertime, and the lawyer's gone at 3 o'clock. I'm not mentioning any names. And we've sent the money over, and there's nobody there to release a deed to us so that we can close and hand over the keys to our client. Terrible situation. That is in essence an escrow closing. So let's say we send the money and it arrives at 5:05, so we can't register. Most lawyers would say, okay, you've already sent me the money. We'll register on Monday. We'll do an escrow closing. So we'll agree that we'll just hand over the keys now. Your clients can move in for the weekend, and we'll register on Monday. That's an escrow closing. So just take that concept and putting it to today's situation. There could be escrow closings. If the bank did fund a deal and the land registry, for whatever reason, closed down, we can hand the keys over to clients, and that's what should happen. But for that to happen, lawyers have to be not in their office. Lawyers have to be available on the phone to be able to say to one another, we're going to have an escrow closing. I know your clients have sent us all the money. Everything's fine. Let your clients into the house. And because that's what we should do to protect our marketplace and the integrity of the whole system. We don't want people having to move into hotels or scrambling, having no place to live at any time in any marketplace, let alone this marketplace.
Awesome. So another question from Charles: if a buyer isn't able to close because of loss of job and change of financial situation directly because of COVID, what legal ramifications does the seller have?
It's unfortunate. It's terrible for the buyer if that happens. And I hope that it doesn't happen to very many people, but I'm sure it will happen to some. The seller, by law, the seller has the ability to immediately keep the deposit. And by immediate, I mean the deposit is sitting in a brokerage trust account. They don't get that money, but in theory, the law is that they get to keep the deposit, and then if they resell the property for less money, they can also sue for damages for the difference. Nobody wants to do that, though. Nobody wants to sue. Nobody wants to scoop deposits. So what happens in reality, even though that's the law, in reality, what happens is you negotiate a settlement between the buyer and seller. And typically it goes like this. Let's say the deposit's $50,000. the seller gets to keep 25 of it for its trouble and time and problems, and the buyer gets 25 of it back. And it could be anywhere from $0 to $50,000. That's a negotiable thing. But it's up to you as an agent to help your clients negotiate a reasonable, quick settlement. If you don't negotiate a reasonable, quick settlement, the only people that win are the lawyers, and nobody wants that to happen. So it ends up in court and gets drawn out, and then registrations get put on title. It's a mess. So you just have to tell your client, look, it's unfortunate, but it's going to cost you some money. Give me the tools. Let me know a range that you'd be happy with in how much you're willing to lose. And that's the reality of it.
Awesome. Anyone else have any questions? Last chance. So Jody, I think that's all for now.
I saw someone snuck in a question here. Hold on. Should we be not making deposits to seller's lawyer and trust with the clause that the deposit is forfeit if buyer fails to close?
It makes no difference, because whether it's held by a law firm or whether it's held by a brokerage, the money is trust funds. So we as lawyers and brokers, that we can't release money that is held in trust if there's a dispute over the money. That's why the mutual release that you have has the parties releasing each other, but it also releases the deposit holder. So in every mutual release that you get signed, it's a three-way release. It's not just a two-way release. And lawyers have to abide by the same thing. If I'm holding money in trust and there's a clause that says if the buyer doesn't close, money gets immediately sent to the seller. If the seller's lawyer says, no, this is in dispute, I can't just send it out. Right. So don't worry about that. I do have a general comment that I'd like to make. We're being a little bit inundated with the whole situation that we're in as lawyers. I'm not just talking about myself and my team, but I'm talking about other lawyers in Toronto, all the lawyers in Ottawa. These are unprecedented times. The lawyers are there to help you. We're there to help every one of you. But we need time to be able to deal with real problems. So when we get emails from people saying, what happens if this, like these things, the reason I'm doing this now, because there's so many of you online. But if we get individual emails saying, should I be doing this or should I be doing that? It's hard for us to react to those. We need to flatten the curve the same way the pandemic needs to flatten the curve. We as lawyers need to flatten the curve. So if anybody has a real problem and a deal that's falling apart or that clients are in trouble, you can call me or any of my staff. You can have my cell phone number and call me. I'm happy to help as much as I possibly can. But try to limit the emails, the general emails to us or to any of the lawyers that you're dealing with if it's not an emergency. And that will make life better for all of us. It'll give us the time to deal with the real emergencies that we have.
That's great. Thanks, Mitch. Matt, I think we're ready to go.
Excellent. I think we do have one quick question. When or if a deal fails to close and there's a lien registered, how long does that registration take? And what if the next sale goes through? Who's responsible for that old lien, as in timing? The new deal closes first.
Are they talking about a construction lien being registered in the interim?
I don't know. Leo?
No, the question really is like, if fail to close,
like a construction
for the lien.
Sorry, I missed that.
So they fail to close. First deal fails to close. They register the lien.
Oh.
Then the next sale goes through, but it doesn't happen. Like, as in, like the next.
I think what they're referring to is if the first deal doesn't close, and then the buyer registers something on title to stop the property from being sold. That can happen and does happen. It's an aggressive move to try and get some of your deposit money back. And that happens. If you have to vacate a registration like that, it means you have to go to court and get a court order to get that removed from title. The second deal won't be able to close if there's something registered like that on title. It's basically a notice of interest that's registered on title, or a notice of sale that might be registered on title, and that can scuttle the closing deal. So if that happens, and if, you know, what we would do in that circumstance is actually have a title search done at the time that you're going to accept that deal, so you can see if somebody's registered something. And the alternative is you put a clause into your agreement saying that the second buyer recognizes that the previous deal did not close, and in the event that there is something registered on title, that the closing date will be extended for a period of 30 days to enable the seller to remove whatever is on title.
I just more meant when you were talking about people registering liens, like if a deal falls apart and they sue them or whatever.
Yep.
How fast does that happen? So let's say the deal falls apart, the lawsuit happens to get registered on title, but they only sell it right after. Like how quick does those things get registered?
It can be registered in a day.
Okay.
Most of them can be registered really quickly. It's very seldom that you see that, because usually if the deal doesn't close, it's because the buyer couldn't close, and the buyer is not necessarily going to spend money on a lawyer to fight that they could close when everybody knows they couldn't. So it's very rare that you see that move taken.
Awesome.
But it is possible.
Awesome. Mitch, thank you so much once again. We really appreciate your time. I know you're busy. I know you're quarantined, but you're also extremely busy with managing all the staff in the offices. So thank you so much again for coming out here and chatting with us. We will post all of your clauses and your contact information, and if there's anything else, we'll happily share it with the group. Thank you again so much.
Thanks, Mitch. Really appreciate it.
All right. Thanks, everybody.
All right.